Andrew Pinder, Head of Investment Banking at Investec, and from our deals team, Ruth David joins us. Thank you both for joining us for our deals report of this morning, of this Monday morning. Let's get your thoughts on the overall appetite for M&A then, given the report we just outlined there that paints a fairly gloomy global picture.
Yeah, morning. Yeah, it's an interesting time to be trying to assess where M&A is going. I think the first 6 months of the year we've seen quite a strong level of activity, people being prepared to do some transformational deals, buoyed by a degree of, I think, quite strong confidence. But you are starting to see a change. I do think the boardroom conversations are starting to change. People are starting to think about the impact of next year a lot more, and maybe that will start to hold a few people back. But so far, I'd have to say, I think confidence levels have remained strong through the year.
And speaking of corporate developments, one of the big stories we've been tracking last week was Unilever's about turn on moving its corporate headquarters out of the UK, which seems to be a big win for shareholders revolting. Are you seeing them get more vocal because the activist investors from the US are coming in and are making these really strong cases? And how do you see that playing out for companies?
Yeah, I think the activists are becoming stronger. I think that's more and more a component of the markets. But I think that's often taken as sort of a negative. I think sometimes that is a positive. But really, anyway, there's a general trend, I think, of engagement. I think shareholders are getting more and more engaged now with boards. You can see it in terms of resolutions. You can see the number of votes that are sort of coming in that are against certain continuing appointments. And so, the good news is I think shareholders are prepared to flex and share their views with boards.
Do you think activist investors from America are going to have more of an impact in the UK than elsewhere in Europe? Is that where the upside will be felt?
I think they're looking, my sense is they're looking anywhere outside of the US. I think they're quite happy to look across Europe. I think they'll certainly look in the UK for any opportunities they see, but I think the trend continues in Asia as well.
The other big UK story, of course, is IPOs. We've seen some big ones flop. We were talking about Aramco earlier this morning, but the smaller names like Aston Martin, Funding Circle, post-trading, they've been doing quite badly.
Yeah.
Why do you think that is, and what do you think the pipeline's looking like?
Yeah, so I mean, it wasn't the easiest of weeks perhaps to get an IPO done last week. I think both are quite unique stories. So they both sort of lacked immediate peers on the London stock market. I think that leads to valuation comparisons being a little bit tricky. I think the markets clearly reacted and decided that they didn't like the valuation at the time of the IPO. But the important thing is really how that trades, over the course of the coming weeks and months, and we'll see how strong those businesses are.
How much firepower do private equity firms have at the moment, and how much is that influencing what we're seeing in M&A?
Yeah, so private equity got lots of firepower. There's lots of dry powder. It depends which report you read, but it's certainly somewhere between 600 billion and about $1 trillion. So there's plenty of money out there. They are looking hard for assets. I think one of the challenges, however, is finding quality assets that they're prepared to move on. We've seen a reduction in the success of auction processes, so a lot of transactions now are getting done on a bilateral basis, and people are prepared to pay up in those bilateral trades.
We're also seeing the boutique banks get more market share from your much larger rivals, including on the mega deals like Sky, Comcast, Fox. Why do you think you're able to do that? And do you think this is something that could get bigger, or have we reached the tipping point?
Yeah, I think with M&A, it's often down to the relationship. I think boardrooms, chief execs, chairman, they're looking for considered advice that they've used many times before and can really trust. And I think a lot of that trust can step beyond the bounds of the brand of the bank itself, and that's always going to play well for boutiques.
That plays well. When you talk to UK CEOs, what is the biggest risk that they talk about at the moment?
Yeah, so there's always a lot of speculation about Brexit and how that's going to impact their business and their business of their competitors. Trade wars, protectionism clearly are agenda items. I think people are discussing it, thinking about it. How much they're feeling the impact of that yet, I think, is yet to really be fleshed out.